Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny. And holy crap, we have Federal Reserve meeting coming out. Jay Powell raising rates again. We're talking about bank failures. Our main man, Charlie Munger, warned about more bank failures on the way. And now it looks like after hours today, one may be happening tomorrow. Holy crap.
My favorite one.
Two Super Guys Trade Stocks.
All right, man. Did you get a chance to listen to Jay Powell today?
Yeah, I got 30 minutes of the speech. I did not get the last 10. I had patients coming.
Well, the part where he said he's actually going to eat your lunch. But basically, nothing was unusual in terms of what actually transpired today as far as the Federal Reserve. We got the quarter-point hike. Basically, we're now at the projected terminal rate, is something Jay Powell said. Everyone tried asking him 8 million questions, 8 million different ways, trying to say, hey, buddy, what do you think? Is this it? Are we done? Are you going to cut next meeting? What's going on for the rest of the year? Okay, are we going to recession? Is it going to be a hard one? Jay Powell didn't change anything really from my interpretation. He said, still hoping maybe you can avoid a recession, but if so, maybe a mild one. That job market's still looking pretty good. That the inflation is cooling, but it's still well above where we want it to be. But we're going to continue to play it meeting by meeting, kind of, and see what happens. He did say that wage growth has come down to the point now where it looks like we may be a couple of points above, as far as interest rate, above where it needs to be to control inflation as far as wages go. So that's a very positive thing. Not that he's saying wage was driving. He made a very clear point of that, but wages were kind of a symptom of the underlying issue.
Right. They really ask some stupid questions over and over. There's some really annoying ones. One guy was like, what would happen if we don't raise the debt ceiling? He's like, not good. It's not good. Yeah. It's not what I do. It's not good, though.
I love that he keeps sidestepping that one, and because he's he's probably thinking it's going to happen. They have no choice. He goes, I don't want to see the world where the U.S. doesn't pay its bills, is what he kept saying. Yeah. And he goes, and I don't want anyone to think that the Federal Reserve has the power to protect the United States if that happens. He was very clear about that. It's this is Congress needs to fix this because I am not powerful enough, despite the fact that I've jacked up my balance sheet to this insane level, can control it. But for a little tidbit here, I don't know if you saw this, but this is currently the Fed funds rate, 5.25, 5.2 to 5.0 to 5.25, meaning highest level since 2009 or something like that.
Right.
Totally ridiculous. This Fed balance sheet, they talked about the big kind of that reverse repo window that they had opened, and now they're back to tapering. They were making some good headway before this whole banking crisis, right? Don't forget, we still have come a long way to go from where we were pre-COVID. Not that they'll ever necessarily get back to that, because as you can see, we've never returned to a prior baseline in any of these QE cycles. So probably not going to happen this time either. But still tightening.
I would still expect down 20% or something. Right.
I mean, look at the trend. This is basically all you get, right?
I get it. Yeah. It's always up, but I mean, we just did so much. It is. Yeah.
I know. I completely agree. And then in terms of employment, he was saying, the job market's been really good. He did kind of tip his hat a little bit into saying that he understands that this kind of contractionary phase where he's tightening the money supply has always led to higher unemployment in the past. But he's saying, and I understand that this kind of is opposite of history, but maybe this time could be different in his view, because the problem was a unique subset of issues that we hadn't experienced in the past. But still, job creation has been strong. Unemployment rate is still hanging out here at, kind of historic lows, if you will, it's 3.5%.
Some people are going to comment that the available jobs are not actually available, that they are fake openings. That's something.
What's the term for it? Instead of quiet quitting, there's there's another term for the quiet not hiring or something like that. I forget exactly what the term was, but
I don't understand the motivation to do that. It's definitely real. I don't get it.
Someone actually did ask a decent question about corporate profits, and I think that kind of ties in how the corporate profits have been wider than they have in any time in the history, really, because we saw this massive demand, and companies were able to just jack up their prices, and they were kind of short staffed, running continually short staffed. So they've had these fat profit margins, and maybe they're continuing that by not actually hiring and having these phantom job postings. That's one of the theories if you read r/anti-work at all.
Oh
You know,
boy.
whatever.
Yeah. That's not good.
Yeah, labor participation rate has started to climb, though. That was another thing he talked about. We did see this really dramatic drop off here with COVID, but it's been continually climbing since then. People coming back to the workforce, particularly in the kind of key demographic of, you said 25 to 40, 54 was like the range you worry about the most. And then, he talked about the ratio here of job openings to people looking, for jobs having come down was almost 2 at one point, down to like 1.8. Now it's like 1.6. So the labor market's coming back in a balance, as he keeps saying. Not anything super crazy dramatic, but it's something we kind of have been following along. Now, this I thought was kind of interesting. I downloaded this today, like right after, after close of the day, and this is the kind of options pricing for the federal funds rate going forward. And it's so ridiculous to me. Like, you literally have Chairman Powell sitting up there saying, like, no, Rick, we're going to stay at a restrictive level for an extended period of time. He has not deviated from that.
He's
Is
said
like
that
doubling down
for
on that.
6 months.
Yeah, and look at this. They already have a freaking like rate hike. A cut priced in for the next freaking meeting.
Wait, rate cut? Oh my God, they
Yeah.
do.
Yeah,
That's
we're at
not.
500 to 525.
Yeah.
Like,
Okay.
it's almost 50-50. But like they are basically right now, this is winning slightly that we'd have a slight cut at the next meeting.
Yeah, he's been saying it for a long time that once we hit terminal rate, it's going to be there for quite some time, I believe was his words. I would take an option trade against this. Is there a way for me to bet against this?
That's a good question. I'm not exactly sure how you could effectuate that. It's a good thought. It's something maybe we can revisit on like a weekend video. We have more time to do some research on it. But yeah, I think it's so funny that we're like completely ignoring him every time he opens his mouth. We just call him a liar. Jay Powell's a liar. All right, you want to talk about like some
hit the
bank stuff?
hit the next slide.
Oh, you already put one on. There isn't one.
Oh, okay. I'm just gonna read it.
Yeah.
So basically, shares of PacWest tanked by more than 50% after hours. The decline came after news that the California bank has been assessing strategic options, including a possible sale. Okay. Regional bank shares sold off hard. Western Alliance was down 23%. Zions Bank Corporation was down 10%. I'm going to show you something. So this is pretty interesting. So just brief history. They're actually relatively healthy. They had 153% of the cash necessary. What was it? What was the term?
It's a CET1 ratio, I believe
Yeah.
you're talking about.
They were not. This is not a irresponsible Silicon Valley FRC thing, right? I believe. Don't quote me. I'll have to look at it. But I think they went from like 33 to like 30 billion total deposits and like back up to 31. So it's not like they were crazy hurting. They for some reason announced this. We don't know why yet, as this just happened. They just announced that, hey, we're looking to possibly sell. And man, $6 down to $2.60 at the bottom.
Yeah. 60%. Mind you, this is a $25 a share stock, like 2 months ago?
Yeah. Upwards of 40. Yeah.
Yeah. Wow. And you had Chairman Powell today kind of remark that he thought like the worst of like the real kind of suspect banks had already collapsed, and we were kind of moving past that phase a little bit. So that's why I was like kind of surprised to see this immediately today after hours that PACW is already like getting slaughtered by 56% or something like that last I looked.
It's definitely weird timing, and in my opinion, it would be as of now, unless something came out that we don't know about, because this like literally just happened. But this would be an innocent casualty of this because they did not do the same stuff that FRC, Silicon Valley, Signature. It's not the same thing. But you can see Wall here tanked. Let me go to the 5 minute. Same time as soon as it was announced, $29 down to 18. So this kind of shows you that perceived risk can become actual risk very fast. Here is now the only way that I would play this. I was waiting for this to go lower right? So I was in this. FRC reported earnings, did not like it. PacW reported earnings and they went up. So I got out because the perceived risk, even though PacW came out and was like, hey, don't let us in with these guys. Here's all of our numbers. I still sold. I made $8. Big deal. I only had like 2,500 in it. But yeah, I sold just because the perceived risk, it just did not make any sense. And then boom, here we are. So if you were trying to play this as a long-term play, if I don't think there's any safe bank that are regional banks right now, not Bank of America or Chase, right? But you can do your less risky KRE, or you could do your incredibly risky DPST, 3x leverage regional banks. Yeah. They're chilling at $4.20. Beginning of the year, they were at 68.
Yeah. Wow. That is absolutely insane. You know, I don't know if you've heard the saying before. It's like, but it's like buy when there's blood in the streets, even if it's your own blood. Have you heard that one before?
I have. This is weird though because it's not. This is the only type of stock where it doesn't have to be doing bad business and can go out of business. It's only bank stocks that have that. There's no other stock that has that. So someone had commented they have a shit ton of PacW. That sucks. What are you gonna do? But
it's still throwing the baby out with the bathwater because you don't even know if they actually are going to go through the sale, and you don't know under what circumstances they're kind of pursuing this. If it's like we got to get someone to buy us up so we have some sort of security. Never mind like what actual price this thing will be transacted for, and it seems so when they're moving so fast, no one is really taking the time to like crunch numbers and be realistic about expectations, and the uncertainty can get you a hell of a discount, but it can also get your face burned off.
Yeah. It's not AMD when they're trading at like $1.75, right? Because they're most likely not going anywhere. They're most likely, that's fine. But FRC reported earnings and went down a lot. And then the next day was PacW, and they're like, no, we're fine. And I'm very glad I got out. But Jesus.
See, I mean, I have some exposure because the way I like structure retirement accounts is I do both S&P 500 and I do the Russell 2K, like small cap ETF, because small caps actually historically in the U.S. have grown a little bit faster than the S&P 500. Yeah, and a lot of the small cap 2K. Yeah, I know, right? Who knows that'd be the case for our lifetime, but like historically, it makes sense. But the Russell 2K has been really kind of beaten down significantly by this. But that's why you saw that little relief pop today, and then kind of tapped back down towards the end of the day. They were up 2% at one point today. Russell 2K.
Yeah, big thing. Apple earnings is tomorrow. Okay, we'll do some SPY technical analysis later, but if Apple earnings are bad, we're probably going to be in a downtrend for a while. Like not a long time, but at least maybe revisiting the 200. We'll take a look. So,
wow. All right, guys. So let us know what you think about this market turmoil down in the comments below. Love to hear your thoughts.
Later.